In my life, if I had done one thing differently back in the 1970s, the Mungers would probably have twice the assets we have now. And it was a stupid mistake, a simple omission, a moment of carelessness. If I hadn't blown that opportunity, if I'd acted just a little smarter, we'd be looking at double the net worth today. That's life, though. You get one or two of those golden chances, maybe, and the rest is learning to play the hand you're dealt. Think about the people you know who are outrageously successful in their relationships. Their spouses are far better than they could have imagined. Now that was a good decision, a lucky decision, and far more important than money. And many of them stumbled into it when they were young. They didn't plan it meticulously. They just recognized it when it came along. But here's the truth. You don't have to stumble. You can be careful. You can recognize the signs, the people, the opportunities that carry danger like a neon sign screaming, "Don't touch." Most people charge ahead anyway, ignoring those warnings, and that's a mistake, a big one. I like stories. You probably do too. They stick in the mind. Let me tell you one. A young man comes to visit Mozart. He says, "Mozart, I want to write symphonies." Mozart looks at him and asks, "How old are you?" The man says, 23. Mozart shakes his head. "You're too young to write symphonies." The young man protests, "But you were writing symphonies at 10. Mozart smiles and says, "Yes, but I wasn't asking other people how to do it." That's the key. You don't need constant external validation to create something meaningful. You need focus, practice, and independence of thought. Now, another Mozart story, probably the greatest musical talent the world has ever seen. And what was his life like? Miserable. He was bitterly unhappy. He overspent every penny he earned. He was riddled with jealousy, and he carried resentments that ate him from the inside. He died young. That's the pattern. Overspend, envy, and resentment guarantee misery. The lesson is simple. Learn from Mozart without repeating his mistakes. Don't be reckless with money. Don't let jealousy poison your life. And always check your ego at the door. Not everyone can learn everything. Some people are naturally better in certain areas. You can't be the top of the world in every field. It's impossible. And trying to do so will just make you miserable. Some will outperform you in wealth and skill and influence. And your response should be, so what? Nobody needs to be the absolute best to live a good, successful life. Another common mistake I see, people obsess over appearances. They build enormous mausoleums, impressive homes, sprawling estates, thinking the world will admire them. The size of their possessions reflects the size of their success, but it's meaningless. True wealth is not measured by what you display. It's measured by what you control, by what you don't waste, and by the opportunities you seize quietly, consistently over decades. Now let's bring this back to business and investing. Look at the history of Berkshire Hathaway. How many meaningful decisions do you think were made each year in the early days? Not many. Very few. But each one counted. It was a game of being present, of paying attention, of recognizing the rare opportunity when it came along. A normal human life only allows for a handful of those real chances. Most people act as if they have an endless supply, pretending to know more than they do, treating every tip and rumor as a golden opportunity. That's the equivalent of a racetrack tout, noisy, grasping, and ultimately ineffective. Avoid those people if you want to be rational. The secret, as Warren and I learned, is simpler than most imagine. Control your costs. Live below your means. Invest consistently. That's it. For decades, we underspent our income, saved and invested wisely. And yes, if you live long enough, you end up wealthy. It's not complicated. It's boring. It's slow. But it works. There is a part of life, though, that requires more skill, recovering from mistakes. We've made them. Everyone does. Berkshire Hathaway started with failing businesses, a doomed department store, a textile company in decline, and a trading stamp business with limited prospects. But we bought them cheaply and managed the losses carefully. Then we shifted to better businesses. Success isn't about doing the hardest things well. It's about avoiding the hardest mistakes and focusing on opportunities that are simple, understandable, and manageable. When I bought the daily journal, that was easy. What we're doing now in software is difficult, but due to the accident of old associations and long-term collaborations, it's working out. The principle remains the same. Find opportunities that make sense, stick with them, avoid complexity, and let time and patience compound your efforts. There's fun in that, by the way, and yes, there's always risk, but controlled, rational risk is different from recklessness. Let's dive a little deeper into those decisions we talked about, the ones that make or break a life quietly over decades. Most people think success is flashy, big deals, loud wins, dramatic moves. But if you look closely at Berkshire Hathaway, at the Daily Journal, at the Munger method, you see something else entirely. Success is patient, incremental, and quiet. It's the accumulation of small, rational choices over time and the avoidance of catastrophic mistakes. Think about life itself. Every day, every year, presents opportunities and traps. Most people walk straight into the traps without thinking. They ignore danger signs, ignore the lessons history provides, ignore their own instincts. They charge forward, thinking they're brave or clever. They're not. They're stupid. But here's the twist. You don't have to stumble into the right things either. You can recognize them. You can prepare for them. You can be deliberate. Take relationships, for example. So many people look at wealth, power, status, or ego and think that will make life meaningful. It won't. Choosing the right spouse, the right partner in life, right people to surround yourself with, that's far more important than money. And it's often about luck, yes, but also about noticing when luck is present. People stumble into good relationships all the time. But if you're observant, rational, and patient, you can recognize potential partners before it's too late or before circumstances push you into mediocrity. That's a decision you make deliberately. Now, back to business and investing. Most people treat every new tip or stock recommendation as a golden opportunity. They act as though there's an endless supply of brilliant ideas, that every conference call, every newsletter, every hot tip is a chance to strike gold. That's nonsense. Most of those people are like racetrack touts shouting false certainty. They don't know what they're talking about. And they certainly aren't furnishing any real opportunities. Avoid them. If you want to build wealth, you need patience, discernment, and discipline. Let's return to history for a moment, because history teaches more than anything else. Take Mozart, the genius we talked about. He wrote masterpieces, changed music forever, yet his life was unhappy. Why? He overspent. He resented others. He envied. He didn't manage the basics of life. Even the greatest talent can self-destruct if the fundamentals are ignored. You don't need to be a genius to avoid misery. You just need to avoid Mozart's mistakes. Control spending. Avoid jealousy. Maintain rational perspective. That alone will put you ahead of the majority. And that applies directly to investing. Warren and I made mistakes, yes. But we avoided the worst mistakes consistently. When we bought the Daily Journal, we knew what we were getting. A manageable business, simple, understandable, with a predictable revenue stream. That's the key. Simplicity, predictability, and rational assessment. In contrast, we avoided complex investments that we didn't understand, regardless of how tempting they seem. You don't need to be brilliant to beat the market. You just need to avoid being stupid. That's all. It's the same principle in life. Overspending, envy, chasing shiny objects, pretending to know more than you do. These are the traps. Avoid them, and you're already ahead of almost everyone. You don't need to hit home runs every day. You just need to avoid strikeouts. It's boring, it's slow, but it works. The compounding effect of rational living, patience, control, awareness, creates exponential benefits over decades.
Let's bring this back to the idea of opportunity. In life and investing, rare chances come along, but very few. You get 1 or 2 meaningful decisions per year that really matter. If you recognize them, act deliberately, and ignore the noise, those rare decisions compound into extraordinary results. If you waste them chasing every tip, following every trend, you'll end up exhausted, broke, and frustrated. That's how most people live. The difference between them and someone like us isn't talent. It's presence. It's paying attention. It's being there when the rare chance appears.
And that's why long-term thinking dominates every aspect of rational decision-making. The magic isn't in predicting markets. It isn't in guessing what will happen next. The magic is in preparation, patience, and attention. You get the fundamentals right. You avoid catastrophe. You seize the rare moments, and you compound. That's the formula. It's not flashy. It's not sexy, but it works. Every time. Finally, let's talk about the habit of living below your means. Warren and I always underspent. Always tiny homes, frugal decisions, careful budgeting. That's not glamorous. That's not the Instagram version of success. But it builds a foundation. It creates optionality. It allows you to invest when opportunities come because you have the capital, patience, and the discipline. Wealth is a natural byproduct of rational living over decades. Complexity, extravagance, and ego destroy it. That's why controlling costs is the secret, and why simplicity beats sophistication every single time. Now, let's talk about rare opportunities. This is something most people completely misunderstand. Life doesn't hand out chances every day. Most of your big decisions are trivial. They don't move the needle. They don't matter. What moves the needle is being present, paying attention, and recognizing the truly rare moment when it comes along. That's where wealth, success, and fulfillment start to accumulate. Take Berkshire Hathaway, for example. Think about its early businesses, a struggling department store, a doomed New England textile company, and a trading stamp business. None of those look impressive in isolation. Most people would have walked away. Most people would have panicked, sold, or ignored them. But we bought them carefully, bought them cheaply, and managed the losses intelligently. And then, crucially, we waited for better opportunities. That's the pattern. Patience, frugality, attention, and the discipline to act only when the odds are meaningful. This principle applies to life too. Think about the people who consistently make great personal decisions. Spouses, partnerships, friends, mentors. They stumble into them sometimes, yes, but more often they recognize when a use carries positive potential and act wisely. They avoid the disasters, the toxic people, the bright and shiny traps. That's the difference between ordinary people and the ones who quietly compound advantage over decades. You don't need to be constantly brilliant. You just need to avoid being stupid and to act decisively when it matters. There's another point here, and it's one that surprises people. Simplicity beats complexity. Most people overcomplicate everything. They chase clever ideas, exotic investments, and novel schemes. They build enormous portfolios full of things they barely understand, and they expect brilliance to appear automatically. It doesn't. Warren and I succeeded not by finding the hardest or most complex investments, but by finding the easy ones. Businesses we could understand, partnerships we could trust, opportunities we could evaluate rationally. That's it. That's the formula. And yes, risk exists, but risk is different from stupidity. You can take controlled risks once you understand and avoid catastrophic ones. That's why investing in a daily journal is easy. Predictable cash flow, simple business model, competent management, low complexity, low risk, high clarity. Compare that to jumping into a hot tech stock or an exotic derivative you don't understand. That's gambling, not investing. And most people confuse the two all the time. You see, the secret isn't glamorous. There's no shortcut, no secret formula, no magic bullet. The secret is discipline, patience, and understanding your limits. Avoid unnecessary complexity. Control your costs. Live below your means. Invest only in what you can comprehend. And wait, that's all it takes. Over decades, these principles compound faster than any speculative gamble ever could. Now let's talk about mistakes, not hypothetical ones, real mistakes. We've made them too. Everyone does. What matters is how you recover. How do you scramble out of a mistake without it destroying your life or your wealth? At Berkshire Hathaway, we had early missteps, bad businesses, poor acquisitions, underperforming units, but we bought them cheaply. We managed the losses we learned, and then we shifted into better businesses. That's the strategy. Minimize losses, maximize learning, and pivot toward opportunities you understand. It's not about being perfect. It's about avoiding catastrophe and compounding advantage over time. Here's a critical insight. The world doesn't owe you constant opportunity. You get 1 or 2 real chances per year, maybe fewer. If you recognize them and act, your life changes. If you don't, decades pass and you're left wondering why everyone else succeeded while you stayed the same. Most people treat every small opportunity as critical and every real chance is trivial. That's backward. The trick is focus, patience, discernment, waiting for the rare moments when action actually matters. And this ties directly into how Warren and I think about wealth. We didn't chase novelty, status, or fancy deals. We controlled our spending, lived simply, and invested consistently. Small decisions every day, repeated for decades, compounded into extraordinary outcomes. That's why so many people miss the point. Wealth is simple, boring, and slow. Complexity destroys it. Frugality builds it. Patience grows it. Rare, intelligent action multiplies it. That's the Munger way. Finally, let's touch on fun. Yes, even disciplined, rational investing and life strategy can be enjoyable. The daily journal, the new software ventures, these are interesting, engaging, and meaningful. Not all business decisions are about profit alone. Sometimes they're about curiosity, creativity, and long-term growth. But even then, the same rules apply. Focus, discipline, understanding, patience. Fun doesn't mean reckless. Fun means engagement without stupidity. Now, let's talk about applying these principles in new ventures, because life isn't static. Opportunities change, industries evolve, and what worked decades ago might look different today. But the principles, they don't change. Warren and I moved from traditional businesses into software and tech-related ventures. Hard? Yes. Complex? Absolutely. But manageable, because we applied the same framework, focus on what we understand, control costs, and use patience as a weapon. You might think software is a completely different world than newspapers, trading stamps, or textile companies. And it is. But that doesn't mean we abandoned our principles. In every business decision, we asked, can we understand this? Can we predict the risks? Can we recognize the rare opportunities? If the answer was yes, we acted. If not, we waited. And waiting is underrated. Most people are terrified of inactivity. They think not acting is failure. It isn't. Inaction in the face of uncertainty is often the most profitable choice you can make. And then there's the human element. Long-term relationships with colleagues, trusted partners, and smart people you respect. These associations matter more than most people realize. Opportunities often appear through connections, through trust built over decades, through collaboration with people who have proven themselves reliable. That's how we got into software. Not luck, not hype. Relationships and careful observation, old colleagues, experienced teams, and a willingness to learn from them. That's what made it possible. The business has potential, yes, but without those trusted connections, it would have been far riskier, far more uncertain. It's funny how people chase excitement. They see a hot stock, a new trend, a flashy tech launch, and they want to jump in immediately. But here's the lesson. Most of those ventures are more dangerous than they appear. Complexity hides risk. Hype hides ignorance. You need to strip away the noise. Look at what you understand. Invest in the fundamentals. Understand the business model. Understand the people. Avoid the spectacle. That's where success hides. Not in flash. Not in the next big thing. Let's take another step back. Remember the early Berkshire investments, a failing department store, a doomed textile company, and a trading stamp business. None of these look impressive. But we bought them cheaply. We learned from them. We adapted, and crucially, we shifted toward opportunities that were simple, understandable, and compounding. That principle hasn't changed in 50 years. Complexity destroys, simplicity builds. Patience multiplies, impulsiveness erodes. Knowledge beats ignorance every single time. And here's the kicker. Most people never apply these lessons. They chase what's new, what's exciting, what promises immediate gains. They ignore history, ignore fundamentals, ignore discipline. They get burned repeatedly. Meanwhile, the consistent, rational approach compounds quietly, invisibly, until one day the results are extraordinary. That's why patience isn't boring. It's powerful, and it's available to anyone willing to follow the rules consistently. Let's talk about mistakes again. You will make them. Everyone does. The key is not avoiding all mistakes. That's impossible. But to minimize their cost, learn and pivot quickly. Berkshire had losing hands. The Daily Journal started as a struggling newspaper. We bought undervalued businesses. We corrected the errors we could fix. We held on to the ones that made sense. That's the formula. Avoid catastrophic mistakes, manage losses, and maximize upside when opportunity presents itself. There's another insight people miss: the rarity of meaningful decisions. Most of life is noise. Most of investing is noise. The big outcomes, the transformative decisions, are few and far between. You get one or two per year, maybe fewer, and those are the ones that shape your wealth, your happiness, your life. Everything else, don't stress it. Don't overcomplicate it. Wait. Observe. Be ready. And when the rare moment arrives, act rationally and decisively. That's the difference between ordinary outcomes and extraordinary ones. Finally, let's return to the idea of controlled living. Warren and I underspent, invested and avoided lifestyle inflation. We didn't need flashy homes, luxury toys, or public recognition. Simple, frugal living allowed us to invest when opportunities arose. This principle scales across life, relationships, investments, career decisions, discipline, patience, and rational behavior compound advantage over decades. It's slow, it's quiet, but it's unstoppable.